Welcome to Trading Lounge and the US indices for the 6th of November. Starting on the weekly chart here, just a couple of things to talk about. As you know, we're looking for wave 4 here, up to wave 5. We're also considering this move up here in 5 waves as wave 1 and pull back for wave 2 and then continue to the upside at that point. But we need to keep these as an even balance point here as a top for the market, or wave 1 here. In both cases, we're going to see reversal to a particular point, and we'll just need to track that and work that structure. As you know, we're looking for 5 waves from wave C here to wave 1 here, or wave 5. And we're looking at this correction here as wave 3 at the top and wave 4 here, and moving higher in this space here as well. Ned Davis from Ned Davis Research Group did some research going back to the 1900s, and apparently it doesn't matter which who wins the election, but after the election the market will push up either way. So it doesn't matter if Trump gets in or Biden gets in, the market will still have that relief rally, and then they have a correction after that. So it really ties in quite nicely. Yeah, that's generally the thing. So there we go. You can look at that on YouTube, Ned Davis Research Group. He did an interview with CNBC, so probably worth checking that out. On our website, we also compared in the S&P charts. We compared the 2016 elections to the current elections as well with charts. So have a look at that. Okay, let's move in and check on these this 5-wave structure to the upside here on the daily chart. So I was looking at this as a triangle pattern here, but because this is moving up quite swiftly here, we need to give it some consideration that this wave 4 will be in place. I can't rule this out just yet, but I'm just dulling it out and dropping it back to a second degree count, the triangle pattern, because we can still count 5 waves up. So as a correction, we can still count 3 waves up here that are not completed just yet. So, but even though they're not completed, those 3 waves, it's going to take it higher than wave B here, I'd imagine, and that's going to put a spanner in the works. So it's probably likely now that we've got an A and a B and a C wave here. It's hard to get a C wave out of here. I can force it. There's 2 ways to do that. It counts better on the NASDAQ as 5 waves down. So what we need to do today is we need to look at this here as an impulse wave, and I can count it in 2 different ways as an impulse wave, so we'll be also looking at that as well. In a nutshell though, to really clarify that this market is going to go higher from this point, we want the 3,500 here as a nice tested support. Now, trading above the number is not support, it needs to test it, so understanding that is critical. So we use the trading levels, and the trading levels say between 3,000 and 4,000 here. We use the Fibonacci numbers of 1, 2, 3, 5 and 8 here. And 5 is the second strongest number, and then 8 would come after that. So we'll definitely see some profit taking in there, and that's also the which I may have mentioned, the 161 area here, so that can be a nice little target sort of area at that particular point in time as well. But you know, big numbers like 4,000, which is a medium level, tend to operate as magnets in the minds of folks, so they think about these things, so we can be drawn to that. But we'll definitely see this market have some type of correction at that number there. So it's a good number to consider once we get support on this level. So getting support on this level here is normally a bit of a process. So we can look at, well, we'll take a closer look at that a little bit later on as we drill in here. So where are we here? We want to go to. So also yesterday as well, we were looking at this triangle pattern, which is a pretty picture, but it's just not panning out as such at this stage. As I mentioned, we can still count this as an A wave, a B wave, and a C wave up here for wave D. But it's like I mentioned, it will take us above this level here, I'd imagine. But we'll check that out. And yeah, so we need to look at this in terms of impulse waves here. In terms of impulse waves here, it's I suppose we could look at it as wave 1 to the upside here, but it's probably better suited in here. So we're going to be looking at that next. So on the hourly chart, we'll look at the D wave here moving to the upside. So with the D wave here, we can look at it as 1 and 2 and 3 and 4 and 5 here for the A wave and the B wave here. And then we can look at this here as 1 and 2 here and 3 here and 4 here and 5 here. That's not quite finished yet. It's coming through on that trend line there, of course. But if it moves above this little section here, then we've got a bit of a problem with that. And this is just not quite finished. We'll take a closer look at that, but just on a 5-tick chart, this is the top here. So we normally look at 100 ticks. This is 5 ticks. So this little move just here, by the by, we can see this is 5 waves down here. All right, so that means that we'll get another 5 waves after correction, and a correction is an ABC. So we've got an A wave, a B wave, and then 5 waves here for wave C. So we've got the A, the B here, and then we've got wave 1 here and 2 here, and 1 and 2 and 3 and 4 and 5 here for the third wave, fourth wave, and extension in the fifth wave. So we've got an A and a B and a C here, which is a corrective pattern. So that means that that top's going to be taken out here for this as well. So this counting up through here, a little bit messy, but it just needs to push higher. But it's not. Yeah, it just needs to take this high out here, which in turn can get quite close to getting up into this high here. So that means that we probably have to rule out this wave D here, but still just need to see another little move up here first for that. So I can't totally rule it out at this point. But let's just go in and have a look at the impulse wave of all of this. So there's different ways to count the impulse wave up. So if we consider this the wave C of 4 here, and I've just put some trend lines in, not that they mean that much really, but they can be a little bit helpful to get things into perspective. So I've just taken this top and this top here and then dropped this one down to this base here. One of the things with trend lines though, that if the market for whatever reason takes the top of the trend line out at this point, then we can be assured that this will be a third wave at this point. A breaking of the top trend line tells us that we're in this, if this is the second wave here, that we're in the third wave coming up through here. So anyway, counting this back here, it's still the same count. So we've got 1, 2, 3, 4, 5 up to this point, 1 and 2 here, and then we've got 3, 4, and 5 here. So I was thinking that we could put wave blue here, 1, and pulling back here nice and sharp for wave 2. And then this building up through here as wave 1 here and 2 here, and there's 5 waves in here for 3, 4, and 5 here for wave 1, and then pulling back for wave 2 here. So we know that this little top's going to be taken out here, so that means that this is going to move up here a little bit further. Just clean that up through here. So even though that it can move up further at this and take that top out here, then we probably could look at all of this as, well, we can look at it in 2 ways, but I won't get into that just yet. But we should expect some sort of correction to play out, which should be supported within group 2. So when we're looking at 3,500 here, we can look at group 2 below, which is 65, 72, and 80. And then above here is 30, 20, and 10 here. Now, what we normally do is that if we get support on top of group 1 here, that means that the market's going to push up to 50 at this point. So if we get a tested support on top of group 1, which is the number 3 there, the 30 in this case, if we get a tested support there, the market's going to push to the 50. And if the market gets support on 50, then it's going to climb higher, and we're not going to pull back from here. Even if we get support on top of 30 here, it's unlikely that we'll pull back into this space here, and this can just continue to cascade higher in that regard. We can count this out here, that's not a problem. So we can look at all of this in the tick chart. This will be 100 ticks. I need to bring a little bit more data in here for this. And this is counted a little bit differently here as well. So I don't have the blue wave one here, I just have green wave one here. I don't need to go into all of these, but every wave's been accounted for 1 and 2 and 3 and 4 and 5. So if we have as a green wave 1 and a green wave 2 here, then we can look at, well, this little yardstick I've got here, this is the length of wave 1 here. So putting that here to here, if I count it this way with going into green wave 3 here, I need it to be longer than wave 1 here. So we need to see this up at the 3600 area. So that's something that if we turn lower before that, then we know that this count is wrong. But as it stands, we can look at this as 1 and 2 here, and then there's 5 waves in here. I don't need to go into that. 2 here, 3 here, 4, 5 here for wave 3, and 4 here. And then from wave 4, going up to wave 5 here. And that will give us wave 3 here. So we need to be, this needs to push up further here beyond this little yardstick I've got here for this. Okay. And from wave 4 here, we can look at this as 1 and 2 here, then 1 and 2 and 1 and 2 and 3, 4, 5 for the third wave, fourth wave. So we still, I can't draw on this side of the thing here, but we need to push up here higher from this, because this is what we looked at on the 5 tick chart. We know that this is corrective here, so we know we need to be making a high above here. I suppose it could be an A wave here, a B wave here, and a C wave to come back down here, but it's not going to go that far, so it shouldn't take the stops out and then push up. But otherwise, we'd need to look at this as basically wave 1 up here, and this is some sort of little correction here. I'll need to pull that apart, and wave 3, 4, and 5 taking us up higher here, and then we would have wave 4, which would probably be higher again here, and that would sit probably above there for that. And then wave 5 coming in closer to the 3600 area, and then we'll go into an ABC for wave 4, and then push up into wave 5 here at this point. And then what this will do, if I can just copy this here, this becomes blue wave 1 at that stage. So it takes us quite high. Just get that right. So I'll just go back to the yeah, that'll do the trick. Just check out. So that's like 3600. So in that case, that's the old highs here at 36. So that's a good place for this wave 1 to be. So we can move this wave 1 up into this space here for this. Just saying. So that would be, and wave 2 coming back and sitting on that trend line would be very normal. So we can expect some, problems in here, and I could see that too. But by that little tiny move coming up here, I could see that it was getting skewed because of that. But otherwise, we could look for this to move up to wave 1 here for this, and then have an A and a B and a C wave coming back into this space, and then pushing up from that point into wave 3. So that's a real possibility, and that's quite interesting because that in that regard, that's going to take us. That's going to take us much. I'm just working on the hop here. I hope that's okay. That's going to give us our third wave up into this space. So that count would take us into the, well up into the into that 4,000 area there, which feels about right, really. So let's just sort of recap this a little bit, because there's been, we have to move with the market. The market is the boss, and we have to do what we're told, and that's the way. We just have to do our best to interpret it the best way we can. So it does appear that this is more likely to be an impulse wave, and with a wave 4 low in place here, and not the triangle pattern. There's two ways to count this up here. In both cases, they can just continue to move up continue to move up, except in this case, if we've got wave 1 at the old high here at 3,600, then wave 2 will come back and sit on this trend line through here. And the other count here, which I'm a little bit reluctant to do, is really having wave 1 sitting in here with wave 2 sitting in here. And that would give us wave 3 up at the high here, at this area up here, and wave 4 across the 3,600, and then wave 5, which will probably just take us closer in this space here for this, between the 3,700 and 3,800. So we'll see. It will reveal itself as we move along, because certain structures will be certain lengths, and a certain perspective has to come into play. So anyway, that's sort of where we are really at today. So we're sort of on the right track. We haven't got it perfect or anything, but we should also expect, the markets, the funny thing is normally I expect, the 35 to give us a bit of grief here. But the other point to this is that I've learned from experience, because it's already given us like a fair bit of grief at these levels here. It doesn't really it won't impact us so much here. But we can't rule out the triangle on another high. But the triangle, as I mentioned, can take us up to 35.50 area here, and that's sort of getting up a little bit high here. See, that's 35.46. So getting up to 35.50, because we need to take those little highs out. If I can just bring this back across here, just to recap this a little bit, this high needs to be breached here. So taking us up to 35.50 here with the old high at 35.46, really sort of starts to rule out that ABC as wave D here, But I'll leave it there for the time being. But anyway, there we go. The takeaway today is that the triangle is heading towards the bin, and we're looking at an impulse wave to the upside. There's two ways I can count this to the upside so far. I'll need to ponder it a little bit further and come up with an answer, but the takeaway is stay long, and it doesn't really matter who. Based on Ned Davis Research Group, it doesn't really matter who wins. The market will have a relief rally and then a correction. So that would tie in quite nicely in the bigger picture with a rally here, and then a serious correction after that. So that's where we are. Alrighty. Thanks for tuning in. Cheers.